in one of the most important aspects of a hedge fund is understanding the structure of the hedge fund. Okay, this basically means that if there is a hedge fund that is operating on a system of how the fund is structured, this has dual implications. A, starting from the point of view of the income tax regulations of the United States or wherever the hedge fund is domiciled, as well as an implication on the returns to the investor. So in this video, we're going to take a look at what is the concept of the master feeder structure, which is the most commonly used feeder structures that has been adopted by many of the hedge funds in the United States. The first aspect we'll understand is the structure of the hedge fund. What do we mean by offshore funds? Then what do we mean by onshore funds? And then finally the structure of the master feeder. A hedge fund, as we already know from the many multiple videos that we have uploaded on this topic, is like a pool of funds which is actively managed by the fund manager who forms a part of the core team of the general partner. The hedge fund is a limited partnership. Limited partners come into the picture because they are the capital contributors, and we also have the concept of general partners because they are the ones who are running the show. Okay, so the hedge funds are structured in a very complex manner to maximize returns and minimize taxes that the investors need to pay. So let's understand now what is the key entities in a master feeder structure. In a master feeder structure, the key entities are simple. Okay? Because I'm saying it is simple, it doesn't mean it's simple. The structure is very, very complex. The first one is the master fund. The second is the offshore fund. This offshore fund is called as a feeder fund. And the third is the onshore feeder fund. And to understand the role of each of this, let's try and understand the role of what is a feeder fund. And the feeder fund is basically the fund that collects capital from different accredited investors. Now, what do we mean by accredited investors? Now, because the risk implications in hedge fund is very high, the Securities Exchange Commission in the United States, as well as the hedge fund itself, keeps certain minimum criteria for investors to be able to invest in the fund. Okay, this could be something like the accredited investor should have a net worth of, let's say, 10 million, but a investable surplus of something more than $1 million. So the concept of having an accredited investor is very unique to the hedge fund industry, simply because you try to want to ensure that the investor who's investing in the hedge fund industry the accredited investors are then permitted to invest in the hedge fund. Okay, so every hedge fund has its own rules regarding the investable quantities of the hedge fund. So the accredited investors put money into the feeder fund, and then the feeder fund invests into the master fund. Now in this, let's understand there are two types of feeder accounts. One is the onshore feeder account and the other is the offshore feeder account. Onshore feeder account is defined by the tax jurisdiction. In the US, taxable accredited investors will invest in the onshore feeder account. Okay? This is the definition given by the tax authorities in the United States. So to understand the offshore feeder, that means they are going to invest in countries which are not under the tax jurisdiction of the United States authorities. So onshore means the investor and the fund are in the same tax jurisdiction. Offshore means the investor and the fund are in different tax jurisdictions. That's all there is to understand this concept of onshore versus offshore. The foreign investors invest then in, or even tax exempt US investors are allowed to invest in offshore feeder funds. Offshore feeder funds are typically in Virgin Islands, Cayman Islands, etc. etc. British Virgin Islands is the acronym given to the location of the offshore feeder fund. Okay, so now let's try and understand the flow of this. The flow of this is US accredited investors invest capital into the onshore fund. Okay, now US stands for United States. Accredited investors are investors who are permitted by the hedge fund to invest in the feeder fund by to whom meet the financial criteria and the investable criteria as well as the net worth criteria to invest into the onshore feeder. US tax exempt foreign investors can invest in the offshore feeder. The only, as mentioned already, the only difference between onshore and offshore is who is the tax, who is monitoring the tax jurisdiction of these investors. Now, the onshore feeder fund, which has collected money from the accredited investors, the offshore feeder fund, which has collected from the US tax exempt investors, then invest in the master fund. Okay, so understand the structure very complicated it is. Investors invest into the feeder. The feeder can be of two types, onshore and offshore, and both onshore and offshore feeder funds then invest into the master fund. The onshore feeder and the offshore feeder collectively put money into the feeder fund account, into the master fund account. This brings up the question that who is then and what is then the master fund? The master fund collects all the capital from the feeder funds and trades in the investments. Okay? The master fund holds the legal title to the investments. So they are the legal owners of the investments. The master fund also passes on all the profits as well as losses with the feeders. So in short, the master fund is like a operating unit which has taken capital contribution but makes all decisions with regards to the investment on the feeder. The master fund appoints the fund manager. The master fund could be a pass-through entity in which the investors into the hedge fund are taxed. The master fund itself is not directly taxed is not exposed to taxes. Master fund is structured like a pass-through entity. Thank you so much for listening into this video. If you like the content, do subscribe to my YouTube channel where I provide content-rich, research-focused videos on topics in fund accounting, corporate actions, trade life cycle, and OTC derivatives.